Two people start with the exact same $10,000. One spends the next 10 years staring at screens, hunting every move, chasing the rush. The other buys one boring thing and then does almost nothing at all. 10 years later, one of them is dramatically richer. And the data on which one is so lopsided, it's almost cruel. Let's settle it for good. Meet the trader first, because the trader looks like the winner. Screens everywhere, charts, candles, adrenaline. Every morning is a battle. Every green day is a high. They post the wins, the big trade, the screenshot. It looks like skill. It looks like freedom. It looks like the fast lane to getting rich. Now let's look at what the numbers actually say. And brace yourself. On any given day, 97% of day traders lose money, once you count the fees. 97. A famous study followed 1,600 day traders for over a year. The ones who really committed, who traded for more than 300 days. Only 3% of them made a profit. And only about 1% earned more than the minimum wage. Let that land. After a year of full-time effort, scanning charts 40 to 50 hours a week, 99 out of 100 would have made more money working a normal job for minimum wage. But surely they get better with time. That's the haunting part. They mostly don't. Around 80% of day traders quit within the first year. Only about 13% are still standing after 3. And the most active traders, the ones grinding the hardest, tend to lose the most, underperforming the simple market average by around 6.5% every single year. The harder they fight the market, the more it takes from them. Why? Because day trading is a zero-sum war against banks, algorithms, and machines with more money, more speed, and more data than you will ever have. You're not playing poker against other amateurs. You're playing against the casino itself. Now meet the investor. And honestly, their story is boring. They take their $10,000, buy a simple index fund that owns a slice of the whole market, and then they go live their life. They check it maybe once a month. They spend less than an hour a week on it. No charts at midnight, no adrenaline, no screenshots. And here's what that boredom earns them. Over the long run, the market has returned around 10% a year on average. The investor isn't trying to beat the market. They just quietly become the market. And by doing nothing, by simply holding while the world panics and celebrates and panics again, they capture almost the entire return that 99% of traders fail to beat. The trader fights for 10 years to lose money. The investor sleeps for 10 years and compounds. One treated it like a war. The other treated it like a garden. Guess which one grew? So the investor wins. Easy. Done. Except no. Because there's a second twist. And it's the most important sentence in this whole video. The investor can lose too. Not because the strategy fails, because they do. When the market crashes 30%, and it will, the boring investor often panics, sells everything at the bottom, locks in the loss, and hands their future gains to someone calmer. The average investor actually underperforms the very funds they own, because they buy high when they're excited and sell low when they're scared. Same disease that kills the trader, just a slower version. So here's the real enemy in this entire story. It was never trading versus investing. It was you versus your own emotions. The trader loses to the thrill, chasing the next hit. The bad investor loses to fear, running at the first crash. The market doesn't take money from the dumb and give it to the smart. It takes money from the impatient and gives it to the patient. Every single time. And that is the genuinely good news hiding in these brutal numbers. You do not have to be a genius to win this. You don't need to be in the 1% of traders who can beat the market. The boring path, buy the whole market, hold it for decades, stay calm when everyone else loses their mind, is a near guaranteed wealth engine, and it is open to absolutely anyone. No skill ceiling, no special talent, just patience. So does that mean trading is worthless? No. For the rare 1 to 3% who treat it as a real craft with strict risk management, a tested edge, and ice in their veins, it's a genuine high-skill profession. But it's a profession, not a lottery ticket. It's earned over years, the same way surgery is, not downloaded in a weekend from a guy selling a course. So who's richer in 10 years? Almost always the boring one. The one who built the foundation first, let it compound, and refused to touch it when it got scary. So build that foundation. Own the whole market. Let time do the violent, beautiful work of compounding. And if you want to trade on top of that, go in with your eyes open, knowing exactly what game you've entered. The trader and the investor started with the same $10,000. The one who won wasn't the smartest, or the fastest, or the one who worked the hardest. It was the one who could sit still. And you can start sitting still tonight.